Hello. Movements are mixed this week. Overall, oil is up, curve gas prices are up and power is down. So let's see what's been happening in some more detail. Brent fell on Monday as poor Chinese economic figures revived fears of a slowing global economy. However, the bulls regained control on Tuesday and front-month Brent rose nearly $1 per barrel. Prices were pressured higher after reports from the API suggested inventories had reduced. Prices dipped on Wednesday as global demand continues to decline while supply is in abundance. Brent tipped the other way on Thursday and prices rose for a number of reasons. Firstly, the weekly EIA report confirmed stocks were down by 3.1 million barrels compared to the previous week. Secondly, OPEC members have agreed to meet on the 1st of July, where they will discuss the possibility of extending or even deepening the cuts. And finally, Iran shot down an American spy drone which stoked concerns about escalating tensions between the two countries. Last night, while prices seesawed throughout the week, Brent closed at $64.32 per barrel, and that's up $2.14 per barrel compared to last Friday.
The system was short on Monday thanks to an unplanned Norwegian outage. Demand was also above the seasonal norm, which compounded the matter. As a result of tight system dynamics, prompt and near-term contracts gained strength throughout the day, whereas longer-dated contracts took their direction from softening oil. Gas prices seemed to ignore market fundamentals on Tuesday, as all contracts moved lower despite gains being reported across the wider fuel complex. Prices continued to slide on Wednesday. A healthy LNG supply forecast, as well as warmer weather, pressured all contracts lower. Longer dated contracts took their direction primarily from a drop in coal prices. Contracts from September 19 onwards all posted daily gains on Thursday. Strong gains in oil was the most influential factor. Last night, near-term contracts closed lower than last Friday. July 19 was down 2.2 pence per firm, whereas curve contracts posted gains of around 0.2 pence per firm.
Most power contracts were supported on Monday. Wind generation was lower than forecasted and CCGT took a more prominent place in the generation mix. Power contracts stalked the movements of their gas counterparts throughout Tuesday and closed the session lower day on day. Prices continued to soften on Wednesday, once again led by the wider fuel complex. Most noticeably, coal fell to a level that hasn't been seen since early in 2017. Thursday's session was mixed. Near-term contracts softened as demand forecasts were revised lower. Longer-dated contracts rose. Last night, most contracts closed lower than last Friday, with near-term contracts making the biggest losses. You can download the full version of this report from our website. Thank you for watching and we'll see you next week.